Oh, so we're going to see a little bit more pain. It's incoming. It can't really deny it. We're waking up to this bad boy here. This obviously is the chart of Bitcoin. We can have a look at that more in a second, but we need to talk about job report. We need to talk about the Fed and what it is that they are going to be doing really to make sure that crypto kind of stays afloat in some way. We have seen a bit of pump recently, which is good. But obviously now there's going to be a lot of uncertainty coming in the next couple of days. Okay, we have massive news. Let's jump into it and actually see what's going on. So first things first, as you can see here, we have a chart of Bitcoin, a general kind of uptrend here that we're seeing, which then we broke above, and that was kind of in conjunction with this downtrend, I should say, that we're being seeing over here. I don't know, AJ has covered this off, now bouncing off of this level as we keep moving to the upside. A bit of a ceiling around that 21,000 level, and almost a little bit of a floor, kind of increasing, as you see with this line, this trend line. But I do think we probably will be breaking below this. The question is what's going to be happening once we do. Going to cover off some headlines for you all now. Jobs market are defying central bankers' efforts to cool demand, which is not a good thing. It just shows the jobs market is too hot. And so the Fed are going to have to do an awful lot more for an awful lot longer in order to be able to actually get unemployment to a higher level. Basically, just make everybody poor. That's the aim. That's number one goal. They pumped too much money. They gave everyone money. And now they're like, wait, we actually need you to not have money because then we won't have as much inflation. And the way in which the job market ties into this, guys, is if everybody has lots of money, let's say, everyone can pay a slightly higher price. And then you have an element of the jobs coming in, because what the jobs do, and this is why the job numbers are so important, is that if there are two job openings for every one person who wants a job, you end up in a scenario where you have people who can afford to leave their job, but they can also move into a new, better, higher paying job. And as long as companies are paying more for these members of staff, they can afford, well, they can afford, they have to charge higher prices to pay for the higher salaries. And so again, inflation moves up. And so this is one of the key elements as to why the Fed want to make sure that the labor market suffers really heavily. But unfortunately, as you see here, a robust labor market are defying central bankers' efforts to tamp down inflation and economists' predictions that recession is just around the corner. There's more on that coming up soon. And as we see here, strong job market, as I've just explained, is bad for inflation, signaling the world's central banks, which are raising interest rates at the most aggressive pace in decades, that they can't ease up. Now, we have a US JOLTS report. I will say this is coming out later on today at 10 a.m. Eastern time. So I don't know what time that is. I mean, everyone's in somewhere different, aren't we? So it's 10 a.m. Eastern time. You can find out yourself. But just looking at this from October, US job openings dropped to 10.1 million, which is the lowest since June 2021. So there is a little bit of progress, guys, but there hasn't really been enough. As you can see here, job openings, like I said, this was from the beginning of the month. There has been a slight decrease in job openings. But if I have, I don't know, $100,000 and I'm making $10,000 a day, if I slow down and I'm only making $5,000 a day, I still have my 100,000, and I am still growing, but just at a slower pace. So it's still not good. We need to see my equivalent of $100 start decreasing in value. Because if, I don't know, there's 50,000 people, they all want $1 each, currently I can give them $2 to $1. I can give them $2 for every one person. The Fed want to bring that down. So that's a really good way of looking at this. The openings need to drop, and also we then just need to see unemployment begin to rise. But we're still a way off. We have the job opening and labor turnover survey, like I said, coming out later on today. And this is going to be one of the indicators. In fact, probably the main indicator that we will have, or that the Fed, Jerome Powell, will have when doing his talk coming up tomorrow and Wednesday. So Powell's favored curve on on the cusp of inversion as pivot hopes swell. I posted this over on Twitter, guys. Make sure you follow us. Also, like the video if you do want more of this type of content. Just gives us an idea as to what you guys do and don't want to know. So make sure you drop a comment if you like what we're doing here. Really appreciate it. It's fantastic. Anyway, the Fed's preferred yield curve measure close to recession signal. Now, this is okay. So this is preferred by Jerome Powell himself. Now, what is it? It's basically the 3-month yield on a US Treasury versus the 18-month yield on a US Treasury. Now, if you notice one thing, every time that we have an inversion, or at least a steep inversion, there is a recession that follows very, very soon after. As you see, red is recession, red is recession, red is recession. And so we're looking, very close to this level now. We dipped below it here, but that still again led to really bad circumstances. Dipped below it here, again led to really bad circumstances. And so if we dip below it here, are we then going to have again more bad circumstances moving into 2023? And so this is something that the Fed really need to kind of manage quite carefully, and make sure that the economy doesn't slip into a major recession. I mean, you can argue they're already in one. I've said this plenty of times. You don't need to hear it again. But we do see continuous news from the likes of Financial Times. Economists warn of a deeper US downturn as Fed keeps up inflation fight. And this is the issue, guys. It's a double-edged sword, So you can fight off inflation. That's very good. And they're like, yeah, we're fighting inflation. But the issue is, in order to do that, you have to make everyone poorer and you have to stop people spending, which means you stop people earning because, I don't know, if I own a shop and no one's buying stuff from my shop because they have no money, they can't afford to buy stuff. Hence a recession. But what are we looking out for? So we want to be looking out for some of these key bits of news, just as I mentioned about the JOLT report, these little bits of news that are coming up that will influence Jerome Powell later on. So as we see tomorrow, and I'll start on today, I should say, a little bit of news from the RBA, the ISM manufacturing PMI. I don't really think this is going to affect us too much, but it will give us an understanding as to the manufacturing data and whether that is, I guess, kind of how the overall economy is doing, but that's not going to have a huge impact. Looking at the next 7 days, we have unemployment change from Germany tomorrow. That's going to be relatively big because this will feed into the whole Eurozone story. And I'll mention that some more in a second. Anyway, federal rate interest decision. As we know, 75 basis points is the anticipated data number that we are going to get. And then half an hour later, we have the Fed press conference. So this is the federal press conference. What's going to be happening? What is he saying? I mentioned yesterday in my video that he won't really be saying too much because he doesn't have too much to go off. He doesn't have an unemployment report. He doesn't have a recent CPI print. When we come round to December, he will have 2 of those, So he'll have, basically the first week we have a jobs report. At the end of the first week, every single month, we have a jobs report, non-farm payroll, as we know. This is coming up end of this week. And then we have one end of December, at the beginning of December. And then also we have 2 CPI prints, I believe, that come after this. So this is going to be a lot of volatility, but I think overall there won't be too much major news. I think he's going to continue being hawkish. He's going to say, look, we are uncertain. I don't think he's going to say, hey, we need to do a 25 basis or a 50 basis or even 75. I don't think he's going to say that in this press conference here because, if he says, hey, we need to do 50 basis point because everything's looking good, and then CPI comes in, above expectation, and core keeps going up, unemployment goes down, then obviously he's going to have to do a U-turn. And the Fed, although they do a lot of U-turns, they don't really like to do it. And then anyway, we have the ISM non-manufacturing PMI, so that's very similar to what we are having today, but just non-manufacturing, which is worth noting. And then, obviously at the end of this week, we have a non-farm payroll. This is where, guys, end of the week, typically people kind of close off their positions. They go home for the weekend. Wall Street doesn't like to have too many positions open over the week. So that's one thing to consider. But 2, I guess like secondarily, is on the 3rd, right? Do you want to have too many positions open when you have non-farm payroll coming in before market open the next day? Probably not, because you can only trade on like pre-market, and so there's not as much liquidity, volume, etc., on the pre-market or post-market as opposed to when the actual market opens in the US, which is at 4:30 my time, and that works out to be 8:30 in the morning in the US, New York. So this is going to be a lot of volatility. Again, expecting that unemployment rate to move to the upside and hoping that non-farm payrolls that these move to the downside. So less jobs added to the market. But just having a look at what Michael van der Pop says, he says probably we'll be having a correction tomorrow or Wednesday before the actual FOMC event taking place. So expect a slight little pullback to the downside. And then big fuckery happens on the actual moment of news coming out. And after that, the party and relief rally continues. So he's expecting, people to be worried, come out of the market and then pump the market afterwards, which I kind of agree with because, like I said, we're not going to have a major announcement by Jerome Powell. He's not really going to say anything that we don't expect. We're already anticipating a 75 basis point hike. So I don't think there's too much that he can say that's going to surprise the market. Anyway, just moving on, 63% of Americans support federal government sending inflation relief checks, which again just kind of shows the division within the Federal Reserve and the general population, because the general population are saying, "Look, we're poor. We are poor. I want more COVID relief checks. Give me that $2,000 in my into my bank account or into my post box. I want that immediately." But if they do that, it's then just stimulating them. It's printing money, it's quantitative easing, it's just going to keep inflation higher for longer. The whole problem is there's too much money, and the Americans are like, "Yeah, give us more of that money. Yeah, I don't mind about inflation. Just keep giving my little stimmy check." But there's no difference really in the eurozone. Inflation is set to hit 10.7%. It's absolutely crazy. So preliminary data on Monday from Europe's statistics office showed headline inflation came in at an annual 10.7 this month. Now, it is just insane. Obviously, the energy crisis is massively hitting the Eurozone more than it is the US, obviously. US creates a lot of its own energy. They have loads of oil, whereas European, not so much. So they rely on lots of natural gas from Russia, which obviously has just gone through the roof and now has been shut off. So any natural gas that remains is like, hey, well, why don't we just charge more for that since you can't get it from anywhere else? So there's a lot of price gouging. It's not necessarily very good, but I do anticipate, especially as we move into winter and demand for energy skyrockets across Europe because people can't, heat their homes. I mean, I have a separate problem over here. Everything's too hot over here, being in the UAE. But obviously in Europe, it's snowy a lot. And so people need to have energy to heat their homes. And looking at the Bank of England, continuing on with this Europe story, Bank of England is set to take historic step in unwinding £838 billion of stimulus. So UK Central Bank plans first bond sale from its quantitative easing portfolio, which they're lagging behind massively against the US. The US, I believe, are currently unwinding, I want to say $95 billion worth of their quantitative easing portfolio, i.e., when they said, hey, we're going to print $4 trillion, we have, and then they're like $9 trillion in debt. No, not in debt, sorry, but their quantitative easing portfolio grew to $9 trillion. They were buying $9 trillion in assets. It was insane. It was really insane. But now they've started selling that at like 95 billion every single month. So now the Bank of England are going to start doing this as well. So obviously they have been accumulating these during a 13-year stimulus program, becoming a test case for how quickly markets can shift away from easy monetary policies. And it is going to give them a bit of an understanding exactly how much they can start taking money away from the market. But is it going to be enough? I don't know. I think it's a very good start, considering that a couple of weeks ago, the UK was like, oh, yeah, let's just cut taxes. Well, how are you going to pay for that? I don't know, like You still have to pay for stuff. You still have to pay for hospitals, police, but now you're taking away the tax bracket at the very top. It doesn't really make sense. Hence why the pound went very quickly to the ground. And so just looking at this again, so November 2nd, 89% a chance of a 75 basis point. I think it's 100, but we have evened out a little bit. We have evened out. So maybe people are now thinking, well, we might actually have a 50 basis in December because, based upon what it was the day before and what it is now, a little bit of a shift in sentiment, but still pretty much 50-50. These guys are probably smoking crack or something. These guys obviously have some kind of understanding. If jobs report does come in lower, if the CPI comes in lower, we will see this percentage chance move up because a lot more people will be like, look, CPI is getting under control. Jobs are now becoming less frequent. And so, we now have the potential to kind of pivot away from the current hiking rates. But I do want to mention, I was talking about the Bank of England. Hoskinson predicts more crypto adoption as sovereign currencies fail. So with the likes of the pound making headlines because it did so bad so recently, there has been this massive question of like, well, are we going to have these sovereign currencies for a very long time? And also the question becomes when you have countries like, I'm going to say organizations like BRICS, Brazil, Russia, India, China, South Africa, they are the typical, BRICS nations. They're looking to now do deals on energy, on goods in different currencies than the US. And the US is the world reserve. If you want to buy wheat, it's measured in dollars. You want to buy oil, it's measured in dollars. And so looking at a move away from that with China, Saudi Arabia agreeing to now sell oil and buy oil in different currencies than the US dollar, typically that's always resulted in a war. But we'll see how this turns out. It could be extremely bad. But he's also mentioning, I should say, a recent Chainalysis report noted that crypto adoption in SA had grown 40% within the last year. Again, it's part of the BRICS nations. So he does see that crypto will get a lot of adoption as sovereign currencies fail. And I think he's probably right. I don't think it's going to be the pound and the dollar that fail first. When he's talking about sovereign currencies, we can look at the smaller economies like South America, or even, did I say South Africa? I said South Africa. But I mean, South America, we do see a lot of these typically unbanked countries moving towards crypto more than what we see the likes of, I don't know, let's say US or UK or more developed economies, unless you're someone like China, in which case you're very big, but also extremely, extremely protective. Anyway, it's Halloween, so I had to mention this. Scary stats, $3 billion stole in 2022 as of Hacktober, doubling 2021. Yeah, I mean, everyone said October, didn't they? I hope you didn't put any money into too many protocols. It wasn't obviously a very, very good initiative, should we say. But yeah, I don't know. Like we said, guys, there were some small trading opportunities. I know AJ brought you some, and those were fantastic. We did really well. But overall, it wasn't that pumpy month that everybody was hoping for. So yeah, we've seen, a lot of downside, which again is another issue in the sense that if there's so much uncertainty, right? What's the US dollar going to do? What are the jobs? What's the inflation? What's the Fed fund rate? What's going to happen with the whole monetary system? And then we say, well, what's the alternative? And if the alternative is crypto, and you then have people like Do Kwon getting, there's an arrest warrant. You then have people like 3AC. Then that's obviously going to be bad for business. And then you have $3 billion stolen in 2022. That again, it doesn't serve as a good alternative. Let me know what you think, though, guys, because I would be interested to see what you make of crypto being an alternative asset or an alternative financial system. Because it's not just an asset so much; it's more of an overall financial system. Because I don't know, it's good. I think it's good. It has a lot of potential, but I think it's still early. And I have always been a believer that I think it's going to be blockchain companies like Consensus, for example, even though JP Morgan owns like so much of it. But I think it's because of that that they do blockchain stuff, which I think blockchain is good. I'm going to say, look, I know you guys don't like it. Dogecoin, even though look at it up on here. Dogecoin up by 23%. Absolutely insane, guys. It's mental. I know it's because of Twitter, and I know it's because Elon Musk bought Twitter. And now maybe you can tip people in Dogecoin. Well, not yet, but looking over the month, over up 140%. Absolutely insane. But I think it's going to be blockchain technology that really pushes the whole crypto market forward, as opposed to things like other shitcoins. Anyway, that's just my 2 cents. Thank you very much for watching, guys, and I will see you in the next one. Take care.